What is up, guys? Logan here again. Thank you guys for all the support as always. Hop in that Discord. Everyone's loving it. We've been making money on Facebook recently. I've been loving it. The trades are just killing it. You guys are doing so good. It's insane. Your calls are working, your puts are working. I love to see it. I think we almost got 100 members now. This is just insane. Check out the Patreon. Check out the links in the description for signing up for Robinhood and Webull and all that stuff. It helps me out greatly. It's a way to support me. I want to chat real quick though. I just got this shirt. This is my CBD company, Great Lakes Wellness, but I think they're super cool. I wanted to wear it in my video. I think you guys will like it. If you guys want to check out my CBD website, link that in the description below as well. Use code LOGANLADGE. If you guys do that, I'll give you guys 20% off your first order. If I do oils, creams, gummies, hit me up on Instagram if you guys want a shirt. I'll send you a price. So let's hop into these options, and I want to teach you guys how to options trade today. So I got a couple DMs this week from a couple of you guys, a lot of YouTube comments saying teach me how to options trade. I'm super new to this, haven't found a video that I've liked that describes options trading in depth. This video is probably going to be a little longer than most of mine. I'm going to talk about everything except the Greeks this video. I'm going to go in, that's the delta, theta, rho, gamma, and vega. I'll get into those in a separate video because there's so much knowledge there. Let's talk about my Facebook put that I just got today. I'm really excited. I bought this when the market was closing. After I sold a Facebook call today, they skyrocketed. They closed at 237.50. They're already down to 236.80 and I'm already up 2%. They don't track options past like after hours. So that's something for you guys to learn right off the bat. You can only trade options from 9:30 to 4. Most stocks you can trade after hours 4 to 6, but people usually aren't trading at that time anyway, so be careful of that. But you will, even if option share prices move after hours, your total return or today's return will not move. That will not move until the market is open at 9:30 the next morning. So I want to just tell you guys that a lot of people have been confused, and don't worry, I was confused at first too, because you watch your stocks, all that trades after hours, so you can see yourself up even more at 5 p.m. or 6 after the market closes. So I just wanted to clear that up with you guys. I hope that helps you. So let's start with a really hot topic and a hot stock right now. Let's go with Facebook. I'm gonna teach you guys how to trade options on Facebook. So we'll go to search, go here, I'll search up FB. Today they were up 5% or $10 a share. Now this is what's really important. Percents really don't matter, like in trading stocks. It's all about dollar movement. So focus on stocks that move a lot of dollars. Who cares if a stock's up literally like 80%, your option might not move very much if you're trading penny stocks. If you're option calling penny stocks, it will lose its value over time unless it's moving dollars. That's what's important. So you want to pick the bigger stocks. That's why stocks like Spotify, Shopify, Facebook, Tesla are all huge popular stocks to options trade. Their premiums are expensive, but they move so much that if you get the right direction for that day or for your time period, then you're gonna do really well. All right, so we see Facebook. We hit trade. It'll give you an option. So you hit trade options. Now that you have options set up on Robinhood. We could see today Facebook was up 5% today, which means, tomorrow's Thursday, the market's closed for July 4th. So the market's gonna close on Friday this week. So we could pick a put every week for Facebook up until August 21st. Then we gotta wait for September 18th, all the way. But we can pick these calls or puts all the way out to the end of 2022. So there's benefits to doing that as well, or buying the ones that are close up, and let me dive into that. Let's start at the furthest one. So if you bought a call today, it would cost $5,000 if you think that Facebook in 2 years from now would be above 240. So your whole goal for this is Facebook to be maybe $300, maybe $400, and your premium would be up an insane amount. Look at this $60 difference. That's 8 grand from 180 to 240. 8 grand here, this is 5 grand. So it's $3,000 over a $60 move because you're protecting yourself. You don't have to worry about the time decay when you buy this far out. But I also don't buy that far out because of the premiums are so expensive. So there's benefits to buying options that expire soon, but also there's a lot of bad stuff that comes along with it that I want to tell you guys about too. So if you see today, Facebook's 237.50 call is up 227%. So if you would have bought this option yesterday and sold it at the end of the day today, you would have made a 230% return on your play. Whether you put in $200 and it got into, you know, at that point, 200% returns, tripling your money. So whatever you had to put in to triple your money here, that would be huge. Imagine you buy 5 contracts for 500 bucks, you triple that money, that's $1,500 in one day. Crazy, right? So, because Facebook moved. So we could also go to July 17th, and you're like, well, why does that cost more and why wasn't there gains as much? That's part of it. You're buying a Facebook call, right? So you hop in, if you pick further expiration date, you have less to worry about because of time decay. If you pick July 31st, so we're looking at the share price of $236.80, okay? So we have all of these in the money contracts, which are the safest calls to buy. Calls you can buy, they're less volatile and they have less decay, because the ones that you buy out of the money, even though they're cheaper, the stock price isn't there yet, so it doesn't really have that value. Unless you think that Facebook's gonna be $300 by July 31st, which I personally don't. You never know. I mean, Facebook was pushing new highs, but if you were to buy this, yeah, you could get 20 contracts for 800 bucks, which would be awesome if you think it's gonna do that. But the time decay is gonna hurt you if Facebook doesn't even get close to that. And that's where you'll get crushed and your option could end up worthless. You think that it's gonna be $237.50 by July 31st. Buy this one, it's $1,100 or almost $1,200. So if I get one contract, it's $1,190. Now what's really important to notice too is you guys will see, okay, there's a limit price. This is what I do. Never market order a option because it could give you the ask price or the bid price. I want you to see the middle ground and always buy whatever it is right now, or you can wait if you think the price is gonna go up or down. But if you're gonna buy an option and you go for the bid price because you're bidding low, I don't think a lot of people are gonna be selling it at the bid price. I think a lot of people are gonna sell it at the ask price, but that's also, you don't wanna buy that price because they're just trying to yank more money out of you. What you wanna do is see in the middle ground. If a lot of people are trading, you can hop in and your contract will execute almost immediately. So it's gonna be really good to do that when you buy. So if you were to buy that, you just hit review and then you swipe up, which I'm not actually gonna buy it. I know I don't have enough buying power, I'm not actually gonna buy this. But that's a way to do it. And then you can also go to contracts, type that back. Maybe you want 3, it'll give you the cost, put in your limit price, boom, you can move on. Let's look at this today. And now you're seeing that the premium's cheaper, right? Because it expires sooner, which is riskier to play, because this will lose value fast. Like if I show you guys the options trading calculator, I haven't pulled that up in any of my videos yet. If we get one contract here at 530, you can play that, and if this stock moves a little bit, this is gonna move a lot. But if, let's say you buy a call and it dips, you are gonna lose value so fast, it's gonna be like a waterfall. You're like, oh, okay, this isn't bad, this is bad, this is real bad, and you don't want that to happen either. So that now that you guys understand how to trade options, look at the calls, you know the limit price you want, now it's time to sit with what you've purchased, and this is my Facebook 235 put where I'm up $8, 2%. Number one, what I want you guys to do is take a look at my expiration date. I picked July 10th because I want to sell this tomorrow. Tomorrow for me is July 2nd, which is a Thursday because the market's closed on Friday for July 3rd because we have Independence Day and July 4th. So the market's closed on Friday. Go America. By the way, my average cost, I paid $405, or my premium cost of $4.05, which is now worth $4.13 or $413. So here's my total return. Here's today's return. So I bought it at $405 and then it started to climb. So the middle price that I paid, remember I showed you guys that, is now the bid price, which is cool, but I want to see it go higher. So let's jump into the bid price. I've already explained. So the mark is what it is right now. The previous close, yesterday, it closed at $1,000. But this got crushed today, as you guys can see right here. You see how it opened at 985, got crushed all day. I grabbed it right here at 350, and then when it closed, it was 413. So you gotta be careful about that. Options move fast, so you gotta set your stop losses. My stop loss on Facebook is 15%. That's my new rule for options after having Spirit kind of implode on me. And it wasn't horrible, but I started to think I could have prevented this just by being a little bit smarter. And don't worry about that. If you've ever lost money or lose a lot of money, you're gonna bounce back fast. You're gonna bounce back fast making good plays. I've made a lot of the money back that I've lost over the last couple of months. I've made a lot of that back even the last couple of weeks or vice versa. So it's really important to know that like there's always tomorrow to make what you lost today. So if you lose 200 bucks, think about tomorrow as the day that you make that $200 back, or maybe 300, and you wouldn't have pushed yourself if you didn't lose money in the first place. That's what we're all about here. That's what's so awesome to see. So let's hop back into this though. So I explained everything. The high was the high for the day. This was the highest that the contract was today. That's what the high is. The low is the lowest this contract was today. Yeah, I could have bought it at 365. I wasn't watching the market then, I was watching The Office, just hanging out, having a good time. Was waiting to see what the market was at the end of the day so I can make some plays. And then we're gonna go down to volume, how many times it's been traded. The trade multiplier is 100. I'll skip over implied volatility real quick because this is as if you own 100 shares of this stock. That's what a contract is. A contract allows you to borrow 100 shares of a stock and then it moves along accordingly. Actually, before I forget, I want to jump into the Facebook break-even price. So mine's $230.95. This is the price it would have to be for me to exercise and buy 100 shares at this price if I could afford it. I can't afford it. I've never exercised a call because that gives you the option to buy 100 shares because that's your contract, or if you have two contracts, 200 shares. So like if you're doing a call and you buy Spirit calls for $25 and maybe they're 22 and it gets to 25 by your expiration date, that will allow you to buy 100 shares of Spirit at $22. But at the same time, that's like $2,200 worth of a stock. I'd much rather sell the premiums. I'd much rather have like a 50% gain or something like that when you're selling and buying. So that's something else to keep in mind. The break-even price only matters if you're holding until the expiration date so that you can exercise your call or your put. It's completely up to you. I just don't have that type of money to be throwing around to exercise. I'd much rather sell premiums and then do it again the next day and the next day than to just, okay, cool, I have 100 shares of a certain company now. It's good if you are getting dividends though, I will say that, but I think it's fun to flip premiums and it's a lot more affordable. So this one's open interest. This kind of confuses people sometimes. This is how many of these contracts are out there right now. This is people who haven't liquidated them. This is people who are just holding on to the contract. So me and 675 other people are holding this contract right now into tomorrow, which is the Facebook $235 put. So that's all open interest means. Some people get nervous and think it's a number they don't understand. Just think about that. If one person buys another call, this would be another put, this would be 677. If somebody sells this put, it would go down to 675. So this kind of gives you a ballpark of how many people are messing with it right now and hold it, maybe to make yourself more confident that someone will sell or buy or jump back in so that you can get rid of the contract when you want to. But besides that, I really don't pay attention to the open interest myself. I just look at the volume because that's what's important. Is somebody there to buy what I'm selling? And that's the cool thing with options. It seems like there is right here. And then now let's hop into implied volatility. So implied volatility is the stock price, the strike price, the expiration date. We also have the interest rate. It's all this stuff that gets entered into a pricing formula, which equals the price of the contract. So let's say you have a stock price that's $200. Your strike price is $210. You have an expiration date that is further out, like the 24th of July. Today's the 1st. So we'll take all that and that will give you your implied volatility. Implied volatility is a dynamic figure that changes based on activity in the options marketplace. Usually when implied volatility increases, the price of options will increase as well. So when implied volatility increases after a trade has been placed, it's good for the option owner and bad for the option seller. Conversely, if implied volatility decreases after your trade is placed, the price of options usually decreases. That's good if you're an option seller and bad if you're the owner. I absolutely crushed it on Monday with Facebook. I bought this at $4.80. This was a contract. It was a $220 call for July 10th. And then I end up selling that about 30 minutes later to make 60 bucks in less than 30 minutes. You just love to see that. I love to see it. If I would have held it today, it actually would have been worth $1,900. I know it's kind of crazy to think about, but that's the truth. I can show you guys right now. If I go to Facebook, we'll search Facebook up real quick. We go to trade, we go to trade options. They're sitting at 237 flat. I showed you guys, right, that was July 10th. Remember, it's the $220 call I sold for $540, made 60 bucks on. Scroll down, right now is worth $1,800. So if I sold one contract, there it is. What I sold for $540 is now worth $1,845. Doesn't hurt, it hurts a little, it hurts kind of a lot. But it's all right, we got this put play right now. I'm up 8 bucks, not 1,300, but I'm really happy with my options this week. I'm up 230 bucks in profit for the whole week for trades that I've made the last 3 days. And then I'm gonna trade tomorrow this Facebook put, so we'll see what it is. I'm hoping to end the week over $300 in profit. That would be amazing. Could have been more. Who knew Facebook would have exploded as much as it did? But I hope you guys learned something today with Facebook stock, and it's just had such a crazy run. Like, look at this overhyped sell. Because everyone sold Facebook in one day, it fell 20 bucks. And now it's basically recovered just in 3 days. I'm not a big fan of trading Ford stock as far as options go, but if you want to trade on Ford, because maybe it's more affordable for you, you could buy a July 31st call. Let's say you think Ford's gonna be $6 because or $6.50. You could buy it right now, you could get 5 contracts, you type in that 25 cents like I said, you hit review, you swipe up, and then maybe this is doubled by then. Maybe it moves enough to do that, which would be really cool. But I don't really mess with Ford. I just want to show you guys how you could exercise it that way. Before I forget to, I want to show you guys Facebook calls and how premiums work. So here's how premiums work. If you see the premium price and you're wondering why it's $5.28, well, that's because it's the difference between the call and the break even is the premium price. And the break even, like I said earlier, is only if you hold it till expiration, that's what matters. Then the to break even percent is how much the stock will need to move for you to break even on your call if you wait until expiration day. So what you can do is, if you look right here, your premium cost is the call mixed with the price to break even. So that's why it's a $237.50 call. If you add $5.28 to that, it will be $242.78. And that's where the premium cost comes from. So that's why when a share price goes up and down, it can change the premium price, because it would suck to have a $237.50 call that break evens at $242, and then tomorrow this opens at $233. Your premium's gonna get cut down a lot. It's gonna get chopped down to be further out of the money, which is just gonna crush you even more. Because if you look right here, see how the further out of the money I get, it's the percentage to break even starts to crush the call. That's another thing to be wary of. So I hope this helps you guys. I will show you more of the calls that I go through with the week. I did really well on Facebook this week. You know, I flipped it, made a couple $100, a couple trades throughout the week. I made a John Deere play again. I'll get more in depth in all these trades in the future video. I want to teach you guys the Greeks in a whole separate video, because those are very important. That's the delta, the theta, everything that I explained at the beginning of the video here too. So it's really important. We'll go through, we'll sit down, we'll talk about every one. I'll show you guys some examples in a future video. I hope this helps you though. I had a lot of people say, can you teach me options trading? If you guys have any more questions, seriously contact me. But this shows you, from my perspective, how I view options when I'm playing them, the premium price. Always set a percent that you want to hop out at, because you don't want to lose your profits by being too greedy. I've done that one too many times. Yes, there's sometimes I miss out on hundreds of dollars, but it's okay, because I would much rather miss out on hundreds of dollars than lose hundreds of dollars. That's just me personally though. I like to protect myself, because if you can minimize your risk options trading, you are literally gonna become an unstoppable trader, whether you're day trading them or swing trading them, because these things have potential. We've seen it, a lot of people are making money. It's cheaper than buying 100 shares of a stock in real life and trying to sell it at a certain percent when you could just buy the premium for a couple $100. So I hope I've helped you guys in this video. Happy to hear some of you guys like that song I linked a couple of videos ago. I had a blast making that. Don't forget to check out Great Lakes Wellness. Please join the Discord, it means a ton to me. Check out the Patreon account if you guys want to support me even further. But either way, I've been replying to Instagram DMs like crazy recently. I hope you guys learned something in this video because I've spit a lot of knowledge in this one, so I hope you guys like it. Let's make some money together, let's keep doing it. I update live trades in the Discord and you guys have been phenomenal. I'm so happy with the amount of subscribers and everything recently. It's just blown my mind. Comment below some of the trades you guys are looking for within the next couple of weeks or ones that you put in for. Go in the Discord, send me a DM, do whatever. But yeah, I will see you guys in the next video.